Hi there. Thanks for joining us today. We are discussing today real estate, as we often talk about money here at Simple Money, but we're talking about the real estate and its connection, and kind of the topic that people are asking. Should I buy? When should I buy? Should I stay renting? There's a movement of people now that are thinking that renting might make more sense, and of course, all that's tied up with cash flow and different things like that. So kind of the rent versus buy conversation and maybe real estate and wealth building kind of in general, right, David? So what do you think? Do you think people should rent, buy? Is it the same for everyone or is it different for different people?
Yeah, it's a fascinating conversation because I think everybody has a want or kind of like a really emotional connection to want to own real estate and um, different goals to do that. And essentially, it's going to be dependent on each person's individual time frame and factors, and we kind of work through clients with that. And it's an interesting conversation because everybody's like, I think you get advice from family or grandparents or friends saying that like, oh, buying's always better because if you're renting, you're essentially just paying somebody else's mortgage. There's so much more that goes into it that people need to factor in that probably get overlooked sometimes. And so it's an interesting conversation and one that is a highly debated topic.
Yeah, and I think that it also depends on what part of the country you live in at the end of the
Mhm.
day, because affordability is a factor and so forth. It was interesting yesterday. I was looking at a chart put out by one of the large real estate data aggregators, and they were talking about, or it showed different lines, and it showed the percentage of home ownership by different races, right? So you had white was typically been in the 68 to 72% range, so meaning that about 70% of white households or predominantly white households own real estate, meaning that 30% do not. So presumably they're renting or they're living with family or doing something else. But then you drop down to Black, Asian, Hispanic, and the numbers are much, much lower. I mean, in some cases in the high teens. So the disparity is a little shocking, because when I've always heard the stat that 68 to 7% of people in the United States own their homes, I assumed it was everyone. And the reality is it's not. There's a gross disparity. And there may be many reasons for that. We're not here to talk about that today. But the reality is I think homeownership is important for everyone, for building wealth. But I think the key factor is when you do it and how do you prepare to do it. Yeah, any thoughts on that, Dave?
Yeah, I mean, coming from my perspective, I'm 26 years old. I have not owned, not had a mortgage, renting for the past many years, and I know that that's the better option for me right now because I live in LA. It's expensive to want to buy. I think the starter home's $1 million or so. That's what we're thinking. It's obviously a way different ballgame than if I was living somewhere else and the starter home was 200 or 300,000. Because rent here tends to be cheaper than maybe a mortgage payment, especially with today's rates and um, that. So, while I do, a goal of mine is to own real estate and to own a house. Right now, it's not in the immediate future for me to live in here. Maybe there's other considerations of buying real estate to rent out or to do things elsewhere in the country, but definitely for my first home, I'm just not quite there yet, right? Because I'm single, I don't have a family. I think that's a big part of why people buy homes is they want to, settle down with a family, have kids, have a space to make memories, and a lot of that is an emotional thing, rather than just a money decision.
Yeah, no, it's interesting that it really hasn't changed, right? The motivation for people buying homes, it's one of the questions I always ask, buyers, like, why now? What's important about it to you? And, and you tend to get the same five or six answers, which you mentioned one, well, I don't want to pay someone else's mortgage. I'm starting a family. We want to settle down. There's community, it's sort of that traditional white picket fence. I find it fascinating that hasn't changed in a couple hundred years in this
Yeah.
in this country. I don't know that it will change or should change. But you bring up an interesting point because owning real estate doesn't necessarily mean it's your first home. So yeah, you're sort of going down that road. David is saying, yeah. So the reason and when people buy homes is they get married, they have kids, they want to be in a neighborhood with a school and so on and so forth. And I think that's still very valid and very true. But the component of real estate, I think, in the last decade has really changed, and accessibility, I think, to a single person has also changed with all these fractional ownerships, with the second vacation home, the Airbnbs of the world, and these abilities for technology to come into the world, and you can buy pieces of real estate in different areas as an investment, and we don't necessarily do that, but I see it. And so one thing that I can remember even back in my own early days before, as we were looking at buying real estate, I had clients that bought their second home first, right? They said, and this was back when things were less expensive, but they would buy their home in Lake Arrowhead or Palm Springs, wherever it might be, before they could afford to buy their primary residence. And they just got their foot in the door, and that's the way they did it. And I still think that's a valid approach. Or you buy with 2 or 3 friends in Texas or Florida or South Carolina or the North Dakota, wherever it is that makes sense to you. Do you feel like your generation is open to sort of that way of getting into real estate as opposed to that traditional path of buying your first home and so forth with kids?
Oh, absolutely. Especially again, because I'm here in Los Angeles, so my friends my age, it's definitely tough to buy a home and want to have a huge monthly obligation when we're young. We don't know where we're going to settle and whatnot. So yeah, there's a conversation I have with friends and with colleagues and with people all the time that, maybe we should buy out of state. Maybe we buy that Airbnb property. Maybe we buy a rental property in the middle of the country somewhere. That would be a good investment just to get the foot in the door, right? Because there's obviously benefits of owning real estate. We all know there's been great appreciation. There's other things that go into it as well. And again, it's just kind of like a psychological thing that it kind of feels like an American dream thing, right? To own real estate. So I think that's why it's so fascinating to a lot of people to want to go out there and do it.
Yeah, and as you're talking it through that, I'm realizing that there's the other component of that is this a good financial decision? So let's say that someone went down the path of, I'm going to buy with 2 friends in North Dakota, for argument's sake. Okay, how does that work? And how do we know we're making money? Because it feels, emotionally right. Okay, I'm going to own a piece of real estate. It's going to go up in value. I'm going to make money. What I would tell people is that it's still an investment decision, right? So your generation has gotten very comfortable, making investments into what would be considered alternative investments. Let's call it crypto. Let's call it, those sorts of things that aren't traditional. Hey, I'm going to go out and buy a stock. I'm going to buy a bond. You're willing to look at different stuff and different ways of doing it. And with the advance of technology, access to financial products has become easier and fractionalized, meaning that the cost of entry to something has come way down. So you can buy smaller pieces of different assets. The same thing's happened with real estate, but it's still an investment, right? And if we say, if we talk about crypto for a moment, okay, so that's, if we're going to buy crypto, is the hope that it's a good investment, or is it just going to go up in value? I can make a ton of money because it's going to go up a lot in value. With real estate, you have cash flow, right? So it's a little bit different than other investments. You have cash flow. You sometimes have expenses, and in fact, even many of those fractionalized things have underlying debt. It may not be carried by the investor individually, but there is debt, and so there's cash flow and so forth. And so understanding what your objective with real estate is really important. Am I going to put in this $10,000 and I'm going to get a check for $2 a month, or do I hope my $10,000 turns into $100,000 in 5 years? And do young people think about it that way? Do they consider cash flow versus ROI, return on investment, or capital appreciation?
I don't think at first that we're thinking about that. I think, you've trained me in being given advice to people around mortgages and real estate the past couple of years. Yes, I think about it that way now, right? Because we've done a decent amount of work on helping clients understand, hey, if you're buying this piece of real estate, rental piece of real estate, what's it going to look like? Are you actually going to be cash flow positive? Are you factoring in the fact that you might not have renters all the time? Are you factoring the fact that you might have to replace that AC unit right when you move in, and that unexpected expense that probably doesn't hit the top of our heads right when we're thinking about buying a house, right? And so I think about that. I don't think everybody does. And I think once you dive into the numbers, it might not look as pretty as we all think it looks. Again, depending on the time frame,
Yeah.
depending on your local market and where you're investing in. And of course, everybody hears the location of, where you're investing in. And I think that's interesting point. But, if we're investing here, again, let's call it in Southern California, in LA, and we buy a rental property, one, we're going to have to put down a big chunk of money. And we're likely going to be cash flow negative. But here we're going to likely see better appreciation rates than if we went somewhere else in the country where it might be better cash flow, but a little less appreciation and whatnot. So there's a lot of factors that go into it. And I think once you're in those weeds, it's an interesting conversation to really get in and see what is best. And talking about fractional investments and whatnot, there's, young people do have a way to get into real estate and the market and things like that.
Well, everyone does. I think young people is more comfortable with the idea, right?
You're right. I just, I've played around with Fundrise before. Not played around, that's not the right word, but I heard of Fundrise and have some money to Fundrise, which is, a kind of pool that buys commercial real estate. You get a small return and whatnot. You can share in the appreciation, you get some cash flow and whatnot. And, that's a way that you can dip your toe into some fractional ownership. So yeah, interesting. What about you? What do you think the thoughts have changed over your career and your advice to clients and conversations?
Well, I do think going back to your comment about LA, Southern California in general, every time I run numbers here, and the ROI, return on investment, the internal rate of return, all the different formulas that we run they suck, to be frank, right? I mean, you're earning 1 or 2% on your money. So from my perspective, why would you go through any effort to earn even 3% on your money when you can stick it in many places these days and earn 5.5% tax-free and have no effort, right? And kick back and watch Netflix if that's what you want to do, or go for a hike, right? Now, I do think there's value in learning about real estate. I mean, my opinion has obviously changed over the years. I think you recall that, we owned multiple properties for a time and had multiple doors. We currently own no investment in real estate because I became very frustrated with the process of management. And even though the numbers penciled out correctly, at the end of the day, the numbers were never what they penciled out to be. It was always different. And so as I've, gotten older, and I'm not sure wiser, but as I've gotten older, the ease of management has become important to me, and not having to deal with a lot of other kind of stuff. Anyway, going back to it, I still think you need to go through the process of learning about real estate, running your formulas, running your calculations. I was chatting with a client just earlier, and they inherited, and this is going to happen to a lot of people, and maybe many of our listeners will have this experience in the next 5 or 10 years of inheriting real estate and inheriting land or money. And the inclination is going to be, let's go buy something with this, or let's go, now we have it. Great. This is awesome. What do we do with it? It's all the same stuff that, does it make sense financially? What's the rate of return? What are my alternatives? What's my opportunity cost, right? So I inherit $500,000. Do I go buy a $500,000 condo somewhere and rent it out for $5,000 or $3,000 or $2,000 a month, whatever that number is, depending on your marketplace? Is that a good investment or not? Or do I give it to an advisor? Or do I buy crypto? I don't know. But all those are individual decisions. And I think just over time, you're going to learn your lessons. But the good news is I think the real estate will always be, if you set it up correctly, will typically be a good investment. And there's many different ways to invest in real estate. When we started the conversation with buy versus own, own versus rent, right? And I do think that you do need to own at some point, but it doesn't necessarily have to be your first home. It can be one of these other ways of doing it, which are interesting. But management is not fun, I'll tell you that.
Yeah. I think the dream scenario would be to find something that, is cash flow positive. You have managers in place to handle all the day-to-day, and you end up just getting that check in the mail, right? That's the
no, of course.
That's the dream.
I think that's what people really want. All right. And looked at a different way, that is passive investing. And there are many ways to invest in real estate and own real estate in a passive way that I don't think the average consumer knows about. Because it goes back to that grandfather kind of scenario. And I think if you could go back and speak with your great grandfather or your grandfather and say, hey, should I own real estate? Now that the land you owned for $10,000 is, $2 million, and I got to take on $1.5 million mortgage to get it. Would I do it or not? And I bet your great grandfather would say, no, what are you thinking? I think they were smart enough to know that it's all relative at the time in which you buy, and so forth. So what?
Yeah, I want to go back. You mentioned opportunity costs, and I want to go back to the buy versus rent kind of conversation we started off with, because I think there's this notion that if you buy, you're going to be better set, financially in retirement. You get your house paid off, your house worth $1 million, $2 million, whatever we see with people these days. And I think that's great, but like you mentioned, there's opportunity costs, right? So if I'm buying a house, and we kind of already established that, likely I'm going to be paying more monthly. So I'm be paying more than I'm renting, but then I have that asset that's growing in value, hopefully. You mentioned opportunity costs. So I think the piece that people miss is that if I am renting, I probably have more cash flow to then go out there and invest that money into the market to earn a different return, right? And many people don't do that, right? They see they're saving money renting and then go spend money in other places. But if you're going to compare apples to apples of owning versus renting, you kind of have to factor that in. Hey, I'm going to spend $7,000 a month on my house payment, including, mortgage, interest, tax, insurance, upkeep, whatever it is. And I'm only going to spend $4,000 a month renting. Well, there's a $3,000 gap. And what I do with that $3,000 is important, because I bet you took that $3,000 and invested in it with an advisor in some, investments that it's likely going to grow pretty significantly if you stick to that plan. And I think people miss that when they're saying, oh, buying is always better because of that, because you're going to have the appreciation and, own the house eventually. But yeah, again, it's kind of like, we use this term, it's a forced savings, right? You're essentially forcing yourself to save money through a house because you're going to have equity in the future, rather than having the discipline to invest that extra cash flow that you would from renting.
Yeah. And I think there's a lot going on there. So, you then have opportunity costs. I think you're absolutely right. Yeah. You look at cash flow, and the opportunity cost is $3,000 that you didn't put into the house because you put it in, you had it, you didn't ever had to put it anywhere. But the first piece of that is discipline risk, right? Will someone take the $3,000 and actually do anything with it? And, based on my 35 years of experience in this industry, there's a very, very, very small percentage of people that understand the concept and will take that $3,000 and invest it in order to gain from the opportunity cost, right? And I think that's a really unique individual to do it. But I will say you may not be right though, because I'm not sure if I can show this here quickly. So here I ran these numbers the other day for someone. So this was simply comparing. Let's see what it was here. I think it was a 750 home, putting down 5% with a payment of about $5,800 a month, right? So you see the 58 there, compared to renting for $3,000 a month, setting aside the cash flow, saving the cash flow, and the $50,000 that never went into the down payment, because you need about 50 grand to buy the house. Your payment is again $5,800, and over here only 3,000. So you're saving 27. And so here's the kind of the long-term difference. And I'll go over here. It's a little bit easier to show it over here. So the long-term 30 years, now very few people hold a home for 30 years, but this blue line is going to represent, the green line represents the savings. So it's ahead for a while, right? Until year 5 and 6, then it crosses over. Now, and this is the cost of rent going up over time. Here's your savings balance. And it doesn't cross over for the reason I'm thinking, but the rent continues to go up. Here's how much you paid in rent. And then here's your savings balance. Right now, over here is your debt coming down, and the savings over here. The savings came from putting the mortgage insurance in over time. But let's go back here and just look quickly at the long-term impact on their wealth. You'll see it all the way down here at the bottom, and without going into too much detail, they're ahead by $1.8 million. Over here in 30 years, they have $667,000. This is only earning 4%. If we change this to even 6%, let's see what it does. Now it's $1.1 million. We have property appreciation rate at 4%. The property is now worth $2.5 million, and you save some money here because that's the mortgage insurance, again, going away after 9 years, actually. So you're ahead by $1.3 million. So, I mean, the quick answer to that question is, yeah, it all depends because we don't know how it goes. Hey, that was fun. Anyway, so again, that's not meant to encompass everyone, but I think over long periods of time, real estate will come out ahead unless you're able to earn 8, 9, 10%.
Again, I think the important part of that is it depends, right? The answer is always, it depends on your personal situation, your personal goals. We ask every single one of the clients that walk in the door, what's the time frame you're going to hold this house for? What do you think you hold the mortgage for, the house for? Because that's a big factor, right? If I buy a house today and I know I'm going to sell it next year, that might not be the best for me, right? We got other costs and things that go into buying a house. Closing costs when you buy the house, and then you got real estate commissions and stuff when you sell the house. So there's a lot that goes on. And so I think the point's well taken that you got to individually analyze your situation and talk through it with somebody.
Yeah. So at the end of the day, should I rent or should I buy? It depends, right?
Yeah.
And we learned about opportunity costs. We learned about discipline risk. We talked about capital appreciation. We talked about fractional ownership, all sorts of different little things. And so a fun lesson. Any other final words, Dave, you want to throw out there?
Yeah, sure. I'll leave everybody with something that you always tell me and tell clients, that if your goal is to want to own your house, to build your family, or whatever your goal is, you can make it happen, right? There's no goal that you can't make happen. You've always told me that. You've always told clients, and I know I've seen it true with clients you've been working with for many, many years that thought they couldn't, and then you get them into a house.
They figured it out. So that's great. All right. Well, thanks for joining us. We'll have show notes with links and some access to resources and so forth. And look forward to seeing you all again. Thanks, Dave.
See ya.
Bye.